Hello. Mic test. Mic test. Hello, guys, and welcome to our 126th webinar of the Trading Opportunity Series. This is Nirav, and let me just run down the quick introduction. Running a few tech things here before we get started. Yes. So let's now get started, guys. So this is your host, Nirav, the admin and owner of 50eyes.com website, as well as the YouTube channel 50 Eyes Market Analysis, bringing to you the 126th edition of the Trading Opportunities webinar. What we do in these webinars is discuss the major markets around the world live as those markets are running. We do these webinars for those of you attending for the first time every Friday, and the time is always the same, 2 p.m. GMT or 7:30 IST. So just convert it to whichever time zone you guys are in. So far in the 125 webinars which we have conducted, we have captured a total of 315 trades. Of course, all discussed live in front of you guys, which includes 3 trades discussed in the last webinar. And we'll check all of those while we go over each chart. Moving forward, other than this webinar, I'd like to bring your attention to our past work. In the past, I have been doing all these video reports and webinars, which were mostly monthly basis. And we have a track record of everything year on year basis. You can see we have an accuracy higher than 80% consistently for these 6 consecutive years. Of course, all of this is a matter of public record and can be checked by anyone. Lastly, if you are new to the ways in which I analyze the markets, which is basically advanced Elliott Wave, then you are more than what do you call required to go over the Elliott Wave video course. It has about 1600 students. In case you are not fully committed yet and would just like to follow the webinars, then I highly advise you to check out the free course of 14 videos, which will be available in the description section, and the link will also be flashing on the screen in a few moments. And other things which I would like to point your attention, if you are an avid reader and have the basics of Elliott Wave clear, you can look into my book Think with the Markets, which is for intermediate to advanced traders, available on Amazon's Kindle edition. Lastly, we do have a service on live broadcast of my analysis as well as trades. You can request detail by filling out this form and selecting this option on the left here. Subscribe to the mailing list if you are interested in getting these updates and other private updates as well via email. And lastly, now coming to our way of conducting the webinar, we will be going over the charts of Euro USD followed by crude, gold, SPX, Nifty, and eventually Bitcoin. We will discuss what we were seeing on the charts last webinar, and then we will be talking about the current analysis. And that's about it for our introduction. And I will also request those of you who are currently live in the chat to confirm if the audio and video is coming out properly or not. At least I can see it properly at my end, but a confirmation from the audience is always better. So here, let's begin our analysis with the first chart of Euro USD on screen from our last webinar or last discussion. Let us see what was being said in that webinar. So at that point in time, as you can see here, 125th webinar conducted 6 days ago. At that point in time, overview was that we will look for shorts below 1.0675 and longs above 1.0935 only. And the main Elliott wave analysis suggested that we have a possible wave 1 up, which is followed by wave 2 down, either complete or continuing sideways, which will then be followed by an impulse in the other direction. Now, keeping that in mind, let's now shift to the live chart on screen. Now you have it. So what we are seeing is a sudden boost up in the movement, of course. Let me show. Yeah. So from this point of reference, our analysis still remains the same. Wave one up, two down complete. And then we are expecting an impulse in the upward direction, which is currently expected to be in the wave 3 degree. I probably should enter some minor longs at this point with the idea to add more once we see the market confirming the upward movement. Give me a moment here. Go to Euro. Done. So I have just entered some minor long positions here with the idea that we are expecting an impulsive movement in the upward direction. The current idea is, if you see on the right hand side, we are expecting a 5 leg up move. Out of these 5 legs, the wave 1 is already complete, which will be followed by wave 2, which is already complete, and this is the third leg which we are expecting is currently progressing. So theoretically and practically, we want to see this market first take out this high of 1.095, then 1.098. That is the expected progression. Yes, that's about it for our discussion on our quick idea or outlook on euro. Technical stop will be at 1.0778, because below this it is possible that this market has some other progression going on. Let me place that as well. All right, so continuing on with our discussions, I currently do not see any activity in the chat. I guess people are not very active today, so we'll just move over to the next chart. Next chart will be the chart of CL, and as always, let's very quickly go over the recording from last webinar and see what was being discussed on the chart of crude oil in our last meeting. So here is the chart of CL. Let's see what was being said. So if I remove everything and the play button here, and yes, so this was the main theme we were discussing on the chart of crude oil. The idea was we were expecting a possible progression as a triangle, and the main theme was that if we do see a moving downside or below wave D low, then we will be looking for short setups. However, if the market goes higher than the wave E higher, then possibly some other count is being played out in this market. Let me just quickly fast speed up the webinar and see if there was some other point discussed here. Not really. So in that case, let's now head over to the actual chart of CL. As you can see, the market has broken the wave BD trend line, this white trend line, which is an indication for sell off. We can enter partial shorts here, but a more conservative setup will be to wait for the break of wave D and then add shorts. It in this case doesn't matter that much unless you are doing scalps, because the D confirmation is just there a little bit lower. So in this case, I would like to possibly wait. I may enter some positions later after I've relooked at it at the end of the webinar. But right now, the setup remains that we look to enter the shorts below wave D low, which is basically the price of, let's remove everything and check, 72.786. So if this count does play out, then below that level, this market is expected to go lower and break 63.82, and then go further lower than that level. So that remains our main theme for this market, and this is the complete trade setup. Nothing much to add here. If you guys have any doubts or queries, you can always post them in the live chat, which for some reason does not look very active. Let me do one thing. Let me just close the webinar and check again. By the way, guys, again, if you are there, a confirmation would be nice, because otherwise I do not have a know-how if these things are working or if they are not working. Well, give me a moment, after which we will shift to our chart of gold. Hello, William, and thank you for the confirmation here. Now, with that, let's now head over to our next chart of gold. And first of all, looking at the study from the last webinar, here is the discussion on gold. Let's delete the drawings on screen. Yes. So if I zoom into it and let's check what was being said properly. So our last discussion on gold suggested that we are seeing possible diagonal in the downward direction. That was one of the two hypotheses. And the second one was that we are possibly seeing completion of an impulse. That impulse was, this is the wave one, this is the two, three, four, and fifth complete over here. So that was the H2. So H2 suggested straight up move, whereas H1 was suggesting small down move followed by up move. So as we can see now on the live chart, H2 is the one which has played out. Here on screen is the live chart, and let's zoom into the part we are actually interested in. Yes. So here is the completion of the impulse. Just keep in mind, guys, an impulse is basically a five-way movement in the downward direction. In this case, 1, 2, 3, 4, 5 in this bluish color. And once this leg is complete, we expected upward movement, which is exactly what has happened so far. Now, after this, what is the expectation or way in which we think this market will proceed? Let's have a very quick look at that. So first of all, second here. Yes. So first of all, what we think here is, if I squeeze this chart, first thing we think here is that this market is possibly, one second, guys, one second, give me a moment here. I'm experiencing some technical problem here. Let me just quickly sort it, and then we'll continue with our discussions as is. All right, guys, done. So yes, as I was saying, that what we are expecting here is that this market is possibly inside of flat correction, which most likely is complete. This is the point of reference for this flat correction. And from this point of reference, what we expect is that the market would remain in a sort of sideways kind of movement. Sideways kind of movement basically means that a boxed range basically. So let's see what this box range was in this case. If I draw the whole box, then as you can see, the market is expected to remain within this box range, but we already know as per theory that that box range can expand a little bit to the upside or the downside. So in this case, the idea was that probably it is expanding a little bit to the upside. Right. Now the theory still remains the same. The box range is still not completely broken. The expectation is that as long as is the price below 2488, this market can still be considered to be moving inside wave 4 of this circle degree as a possible flat structure, which in this case could be counted like this: a wave A, a wave B, a wave C, which can then lead to a movement to the upside. That is what we call, let's say, hypothesis 1. And hypothesis 2 would be that this whole thing is still continuing. This range is still a wave B, which will then be followed by a C down and then upward movement, which is what you will call, let's say, hypothesis 2, which is suggesting more downside movement before the takeoff. Hypothesis 1 is suggesting downside movement but smaller, and then a bigger up move. So now let's look at H1 in detail, because H2 kind of is not very relevant at this point. We already know that the market can just propagate within this box range as much as it likes to. We do want to see the details of the same. Now we go with the assumption that of the flat structure, our wave C is already complete here at the bottom left. Then we are left with the idea that this leg up is got to be an impulse in the other direction. Now, if this leg up, which starts at the price level of 2352, is an impulse in the other direction, then this is the kind of progression we expect. We expect a wave 1, we expect a wave 2, already complete, 3, which is most likely complete just now, then a sideways movement for 4, and then up. So this is our main theme right now, H1, suggesting minor correction to the downside, which will be followed by a bigger up move. And how much this minor correction will be, generally wave 4 is expected to go till a certain fib ratios, which we can project here. These are giving us the price levels of 2452 followed by 2437 or 36. I'll just type that here. So if we are experiencing or seeing the count correctly, then we expect the market to take support either at these mentioned levels or before them. Once the same has been achieved, then we expect the market to continue or resume its upward trajectory or upward trend. In my case, I currently do not have any long positions being held on this counter. The reason is that I'm mostly doing scalp trades on gold. We will have a look at some of them in a bit. But right now, we expect the market to do something like this, a zigzag move or possibly something more complex. If a zigzag, then we expect the market to go to 2436, maybe even. If there is something more complex or a possible triangle, then it can sustain around 245 to maybe, just an assumption. But the crux of the setup becomes that only at the break of the level at 2477, that is once this market has given the sideways movement and then breaks this high at 2477, then we will look for long trading opportunities on this counter. That's the whole theme or the whole proper idea behind this setup. So with that in mind, we have discussed the important levels of support, the breakout upside level, the possible progression, and the entry plan for this market. And let's just quickly throw in some of the very quick trades that I had taken on gold. Here it is on screen right now. And we have some other alerts firing less than. Got it. Okay, it has touched our first support level 2452. That's what the alert was for. Yeah, as I was showing, we had taken some quick scalp trades on gold, added minor longs at 2430 as stop loss, and then booked profits. Where's that around the price level of 2463? Entry is around 2455. So roughly 8 points. Let me see if there were more trades. I do distinctly remember 2 trades. Yes, that was more of a short term trade. Anyways, this is how we proceed in our private Slack group. All trades and analysis are posted live with the complete commentaries. As you can see, detailed commentaries. In this case, it's just the entry details. But yes, as you can see here, detailed commentaries of how we are doing things. And as mentioned earlier, if you are interested in the same, you can request the details by using the link scrolling at the bottom of your screen. Yes, moving on, we do not have much to add here as far as this analysis is concerned. If you guys have any doubts or questions, you can just post them in the live chat. Otherwise, we'll move over to the chart of S&P's 500. So here's the 125th webinar recording. Let's quickly check S&P's 500 chart. Around somewhere here, we have the discussion starting. Yes, so this was the main theme. There were two basic ideas discussed. The first one was that we are seeing a downward progression, A down, B up, followed by C down for what looks to be a possible zigzag, and the C was expected to be a possible diagonal formation, ending diagonal in specific because it was expected in the last leg. And there was a second review. Let's see if it was discussed here. The second review was that this is a possible fourth wave, which can then propagate sideways before going lower for the fifth. This was mentioned in the actual webinar. You can check the whole thing in detail. Right now, my idea with these little bit of reference is what I wanted to show you. But anyways, let's now check the actual thing and see how this market has behaved since then. So here on screen, you have the chart of S&P's 500. This was our last update. I was expecting possible pullback before the letdown, but as you can see, it just shot down. Not every time we can catch every single move. Looks like the correlation is working extremely well with the currencies. But anyways, so now coming back to our discussion, as I said, our idea was basically last time was to see a possible diagonal from somewhere here, but we did not see that. Second idea was it will go sideways and then fall. In this particular case, it has done something a little bit different. It has, although gone in the direction we expected it to, it has done that as a kind of a complex formation is what it looks like. So basically a complex formation in Elliott Wave terminologies is a series of three threes. So first three legs are called a W, next three is called an X, and the last three is called a Y. So here is your first three, second, and the last one. Now I will have to check a little bit more detail if we have the first A leg of the Y complete and this is the B and this is the C, or if this is just whole thing is just the A wave. Right. So with that being said, let's check out the targets for this progression. It is already heading towards our expected level of 5305 to 5216. Right. And because I was expecting a pullback, I did not enter any shorts right away. I think possibly scalps I had taken, but nothing major. And currently I'm out because of that reasoning. So, yes, this is one of the moves which I knew about and did not trade. So far, I think if this market does break below 52.16, then we will have to redo the counts. And it is possible that it's not a WXY, but possibly something completely different than a WXY. So, but we'll look at that when we reach that point in time. As far as the current leg is concerned, we will look at it as a WXY. Nothing much to add here. And yes, one thing, if it's a WXY, as soon as the Y is complete, we want to see the market go back inside this yellow channel. And once the market is back inside the yellow channel, we will wait for the market to propagate above the upside or upper trend line of the yellow channel. That will be the level for our what do you call long entry or idea for long entry, not level. With that being said, we have now finished our discussions on the analysis of S&P's 500. If you guys have any doubts or questions, you can put them in the comment section. And the markets are moving quite fast today. Yes. Now we will head over to our last two charts, Nifty followed by BTC. And of course, at this point, I would like to make a very quick respectful request. So if you guys are enjoying the content, obviously hit the like button. But much more importantly, make sure to share the content with your friends, colleagues. If you are in a traders group on WhatsApp, Discord, Slack, or if you're using some other form of messaging platform to connect with your fellow friends and colleagues in the trading community, then kindly share this content over there so that we can achieve a greater number of audience. Here is the chart of Nifty as discussed in our last webinar from the recording. Let's see the exact point what was being said or discussed. Let me just play this to see the exact details and increase the speed, of course. So this was the discussion. We were expecting that this market is currently inside a wave 3 or C, which has possibly more upside remaining. If not, it will go sideways, which will then lead to market going higher to 25040. That was our upside target for this counter. Now let's see what has happened in this market, and which I can tell you is precisely what we expected. So this was the point of discussion on 26th July, I believe. Let's see the last date. Yes, it was 26th July. So this is where we discuss the market, and as I mentioned, some upside may be remaining for 3. So this was the upside for 3. And as you can remember with the arrows, we had mentioned that some sideways movement followed by upward movement to 2040. Now look at all those claims. 25 25040, I mean. Now let's look at all those claims. First, it did go higher for the third, then it did go sideways for the fourth, and then it did go higher to 25077. It actually could not sustain properly above 25050. So only 10 points higher than our expected target. After which, not only did it go and make a spike, it actually reversed. So literally everything played out as it is. And I highly advise that you actually go to the last webinar's recording here on YouTube. Let me show you how to do that and check it. So first of all, this recording will be available here, obviously on the live page of the YouTube channel. Just click on 125th, and all of these are timestamped, so you can go around 26 and check all of it. So all of these points were obviously stated with greater detail, and that's why I'm suggesting you to check them. And again, if you were live there and you did check it live with us, do let us know in the comments or live chat, and do not forget to share this work so that I keep bringing you more quality work like this. So here now we want to discuss the current progression. I am expecting a continuation of upward movement unless the market gives us some extremely strong bearish signs. So what I'll do is remove everything and just show you what we are expecting is a wave 1 up followed by wave 2 down. And we are then expecting a possible wave 1 of lower degree followed by wave 2 down of a lower degree. So this is a general progression we are expecting. That basically means with this wave 2, we are again looking for 3 waves in the downward direction, just like we did last time. 3 waves in the downward direction. Whatever the count was, the B was here. Okay. So let's look at it in more detail. There are, by the way, at least 2 more scenarios here, but they both are basically suggesting the same thing. So I'm not going to discuss them in detail. The main theme we are expecting is some downward movement for the fifth wave, which will be followed by the B circled and then another leg down, which can take this market to as low as 24460 from 24575. So this is the expected range in this market. It can take support. Now here is one thing which I have to very specifically mention. I am not sensing a very strong bullish continuation on this market as of yet. Basically, what I'm saying is there are a lot of signs of weakness which are piling up on this counter, and we do not have evidence to go completely selling off or completely believe that this range is going to get broken to the downside. Basically, this level 24130 is going to get broken to the downside. So what we can do in a situation like this is focus here on this upcoming support between 24575 to 24460. If the market does not sustain within this range or above this range, then it can be a cautionary sign that this market can probably go and see this leg continuing much, much, much lower, right? So stay cautious about that. And obviously, I'll come back in and talk about this market in next week's edition. But until then, that's the only information I can add. There will be multiple updates in the middle, but I don't post too much on TradingView or Twitter or anything. So, but if I find something important, if I do get the time, I'll probably will. Otherwise, like group is only place where I'll post. Right. With that being said, nothing much I have to add here. Just watch out for this level, and for the upside, it is quite clear and quite evident. We want to see the move at least higher than this alert line plays at 24850. Let's say only above that we will look to consider any long possibilities. Otherwise, no. That's about it for our discussion. If you have any doubts or questions, you can post it in the live chat. Otherwise, let's head over to our last chart of BTC after we have checked the last webinar's recording. So here is BTC as discussed in our last webinar around somewhere here. Let's see. Yes. So let me just play the whole thing. And the setup was very clear. We were looking for longs above this alert line. Let me zoom in. This alert was placed at let's see where this alert was at 68407. So this was the main theme on our last discussion of Bitcoin long above 68407. This was the count, and here is the actual chart. So the market did go above 68407. It did go higher, and it took resistance at our CN color trend line twice before seeing an actual viable sell-off. So the count from last analysis obviously did play out, and the progression now is a bit unclear. There are two main themes here. The first one is suggesting that the upside progression is still in play. The X is still continuing. Basically, this leg is still continuing. But for that, we will need a confirmation, and the market should take out the high of 69,806. Unless we see that breakout, we do not have a very clear sign or evidence suggesting bullish continuation from a swing perspective. Perhaps some short-term intraday longs can be taken, but other than that, nothing very crude we have. And on the shorter side, we do not have any confirmation just yet. The actual confirmation level is below and way too lower. So I wouldn't call it a strategy or anything. It's just a wait and watch for shorts. No clear setup. For longs, we do have a clear setup above 69806. So it's more or less a less clear market and possibly wait and watch kind of market. With that being said, we have discussed all the charts which we generally do discuss in our webinars. And those of you who were with me in the webinar, thank you for staying till the end. I am sensing a little bit lesser participation in our live chats, these webinars, last one and this one. Don't know the reason, but then again, guys, as I always request you guys to share the content as much as possible with your connections so that we can continue doing this. Thank you for staying till the end, those who did, and I'll see you guys in the next one. Take care.